Good morning, Evans. Let's talk big picture first before we go on to some of the individual companies. So let's look at the market generally, the trends, the outlook. We haven't asked your opinion on that for a bit.
Yeah, I think it's been quite interesting what we've seen happening, especially in the run-up up until we got to mid-year and up until now. We're starting to see a bit of a slowdown in the momentum. If we look at a lot of these markets that have been correlated over the last, let's say, 2 or 3 months, there's been a bit of a slowdown, there's been a bit of a pullback, and we're starting to see markets that basically lagged for the beginning of the year, like Ghana and also Zim, actually probably playing a bit better than what we've been seeing locally. As far as the local index is concerned, we think that there's very little limited upside from here. We're targeting about 42.70 from current levels, and basically a lot of the activity is being driven by foreign investors. So local PMs, you'd expect that as you get towards the end of the year, they want to realize more of their gains. So there've been a bit of a sellout in some of the stocks that they would typically hold, and we expect that momentum to hold on heading towards December.
Evans, we often use the phrase here in Johannesburg, we say the Johannesburg Stock Exchange took their cue from Europe, America, from Asia. Where does Kenya tend to take its cue from? Does it, is it sensitive to other areas and therefore doesn't follow that herd?
Yeah, that's actually a good question. I think what we've seen, especially since we started seeing the first and second rounds of quantitative easing, was a lot more of asset correlation between classes that basically were, playing at a bit different levels. So we've seen that also playing in the equity markets. I think if you were to pull up a chart of, say, the S&P 500 and plot like the NSE 20 share index, the Nigeria NGSC 30, you'd sort of see that sort of correlation taking place. Now, the way we're explaining that there's a lot of foreign money that's been sitting on the sidelines that's coming in, for positive carry and basically just to take advantage of the cheap valuations that we've been seeing here. So again, if that theory then holds, we'd say that it takes its cue. Definitely with more foreign investors participating, you'd expect to see a stronger correlation with international markets, but obviously there'd be a bit of a lag as orders are being worked and analysis takes place. So I mean, if you were to see the S&P 500 say start to decline, you might have to wait 2 or 3 days before you see a similar effect when guys take profits, and you would expect towards again the end of the year that the correlation would be stronger. So our feeling again is that foreign flows are driving a lot of activity on the market, and you expect that correlation to be stronger up until second half of next year, when you have a lot more certainty and you have local fund managers again now coming in to reclaim activity.
Interesting asymmetrical cycle there. Also, foreign investors you mentioned there, they are clearly interested in interest rates, the bond market and the shilling. What's the cocktail there doing at the moment?
I think anybody who wanted to play rates, and especially the shilling, coming in now would probably be a bit late to the party. I think from January all through to about September, we saw yields crashing, and that was basically the duration play unwinding there. And I think anybody who was more prudent would have looked to sort of exit at those levels, because right now what we've seen again, when we're mentioning correlation, if we look at, for example, yields in Ghana and yields in Kenya and Nigeria lately, again, there have been a bit of an uptick in those 3 markets. So I think anybody who was holding on to their bonds probably would be looking to get out now. Our feeling basically is more like on a structural level, you'd expect to see a bit more weakness in the bond market, especially between the 2015s, 2017s. We're a bit bullish on yields at those particular levels, but we think, again, local fund managers will probably want to come in and lock in those high yields at this point in time. So I think, if you are probably looking to play the currency, we think there's a bit more weakness coming in. We're working with, towards when we close our year, I think around April, we expect to probably be at about 90, 91 levels. And, I mean, then you probably would not be wanting to hold, Kenya shilling denominated assets at that point in time. So I think probably just at a personal level, we reach it out and see what happens as we go into the elections. Okay.
Then there's a company that we often talk about on the show, and that's Safaricom. There's always something of interest about that company. Closing at a share price of 5.25 yesterday. They're going into microfinance and also talking about branching into South Sudan, that new country.
Yeah, I think it's actually quite interesting the way they have timed the news, particularly with the microfinance, especially considering the fact that just last night there was again the issue about the cuts on the mobile termination rates, and everybody has been talking about this for the fairly longest time, and basically people have been expecting that there'll be a decline, in the revenue growth, and you again see your EBITDA margins again coming down. They may have to restate their numbers, that they did first half, that the market has positively reacted to. Now, as far as these new ventures are concerned, I think, if you look at basically what the management is probably seeing is that their stable source of income, which has normally been voice revenues, I think that market is, it's probably, it's pretty mature at this point in time, and you don't see much growth coming from those levels. So management has been innovative. They've been actually very prudent in trying to find out, find new streams for revenue. And I think the microfinance play, if they can get it right, that would probably be bigger than M-Pesa, I think. And as far as South Sudan is concerned, well, there's always been a lot of talk about whether they'd actually do some cross-border M&A sort of type of deals. So I think this would probably have to be, maybe a greenfield operation. I think they already have some sort of form of coverage there by roaming. So by extension, I think it should be fairly easy to kind of, scale up in that particular market. So a lot of local companies have been talking about South Sudan. I'm not surprised that Safaricom are also looking at the same market. I think this is the kind of story that investors want to hear, looking at the share price momentum now and value prospects going forward.